TGE, a token generation event. You've seen plenty of them and you know how they look from one side, the trader's side. The announcement, the first candle, the chart going wild. But what's actually happening on the other side of the screen, on the market maker's side? That's what we're showing you today. We're market makers. We've sat at the desk for more than 2,000 launches, and we're going to run through our listing day routine hour by hour and share the insights founders usually never get to see. Quick note first, this is education, not financial advice. Let's start the clock. Part 1, what TGE Day is. TGE stands for Token Generation Event. The day the token is created on chain and usually the day it starts trading. Up to this moment, everything about the project has been private. The price was whatever the last funding round said. The holders were a list in a spreadsheet. On TGE Day, all of that meets a live market for the first time, and the market starts voting. What makes this day unlike any other is that there's no history, no chart, no support levels, no reference point. Nobody, including us, knows exactly where price discovery will land. What we do know is what the order book needs to look like for that discovery to happen in an orderly way instead of chaos. And that work starts long before the first trade. Part 2, the night before. TGE Day is won or lost in the preparation. The night before, the desk runs through a checklist. First, inventory. The tokens and the stablecoins we'll use to quote both sides of the book, positioned on every exchange the token lists on. Second, connectivity. Our systems talk to the exchange's systems constantly, and they get tested and retested because on this day, a minute of downtime matters. Third, parameters. How wide will quote, how much depth will show at each price level, how the settings should adapt if the open runs hot or cold. And fourth, people. During a major event like a listing, we'll have multiple traders assigned to a single asset, watching it around the clock. By the time the listing goes live, nothing about our setup should be improvised. The market will bring enough surprises on its own. Part 3, the first minute. Then the pair opens, and the most misunderstood phase of the whole day begins, price discovery. In the first minutes, there is no consensus on what this token is worth. Some people paid private round prices, some got an airdrop for free, some are seeing the name for the first time. All of them meet in one order book, and the early prints can swing violently because tiny amounts of volume are moving an empty book. This is normal. Founders watching the first candle often panic at moves that are just the market finding its range. Our job in these minutes is not to decide the price, it's to make sure there are real orders on both sides the whole way so the discovery happens against depth instead of against air. The market picks the level, the book decides how rough the ride is. Part 4, the first hour. Once the range starts to form, the first hour has a personality of its own and founders should know it in advance. Early selling is structural, not an insult. Think about who holds the token at minute zero. Airdrop recipients who got it free and for whom any price is profit. Early backers who may be up many multiples on paper. Short-term traders who joined for the listing and always plan to flip it. Some portion of all three groups sells early at almost every launch we've ever sat through. That's not the community betraying the project, that's just what the holder base looks like on day one. The question that decides the day is never whether that supply shows up. It's whether the book is deep enough to absorb it in stride. Part 5, at the desk. So what are we actually doing while this is happening? One thing, continuously. Keeping the order book healthy. We quote both sides, a ladder of buy orders and a ladder of sell orders around the market price, and we refresh those quotes constantly as trades happen. When a sell wave hits, our bids are part of what it fills into, and we manage our inventory so we can keep quoting instead of stepping away. When buying surges, the same thing happens on the other side. What we're managing is the spread, the gap between best bid and best ask, and the depth, how much size sits near the price. What we're not doing is deciding where the price goes. A market maker that promises a price is telling you something no honest desk can promise. The market sets the level. We make sure there's always a counterparty while it does. Part 6, the numbers we watch. Here's the part that surprises founders most. On TGE Day, price is not the number we stare at. We watch 4 other things. The spread. Is it staying tight so trading stays cheap? The depth. How much can someone buy or sell near the price without moving it? Uptime. Are our quotes live on every venue, every minute? And balance. Is the flow one-sided and is our inventory positioned to keep quoting through it? Exchanges watch versions of these same numbers because they tell you whether a market is functioning. A token can trade down on day one and still have a healthy book, and that market can recover. A token that trades up on a broken, empty book is the one that's actually in trouble. Part 7, What Can Go Wrong? Now the honest chapter, the ways a TGE day goes sideways. A book that's too thin because liquidity wasn't budgeted properly, so every market order gaps the price and the chart looks like a saw blade. A surprise supply wave because someone misread the unlock schedule and a tranche became sellable on day one. Technical issues, an exchange API slows down, a deposit gets stuck, and suddenly quotes are stale on one venue. And panic decisions, a team seeing normal discovery volatility and making impulsive changes midday. Notice something about that list. Almost none of it is bad luck. It's preparation debt collected at the worst possible time. Most TGE disasters we've seen were decided weeks before the day, in tokenomics, in budget, and in planning that didn't happen. Part 8. Good day versus bad day. So what does a good TGE day actually look like? Not necessarily a green candle. A good day is a tight spread that holds through the volatility, depth that absorbs the early selling without gapping, quotes live on every exchange all day, volume that settles into a rhythm instead of dying after the first hour, and a team that spends the day executing its plan instead of reacting to every print. A bad day is the mirror image, wide spreads, air pockets in the book, stale quotes, and decisions made from the chart instead of from the plan. Direction on day one is mostly out of everyone's hands. Structure isn't. And structure is what determines whether the token still has a functioning market in week 2, which is where the real story starts. Part 9. Day 2 matters more. Here's the perspective shift we wish every founder had before their TGE. Launch day is the start of the market's life, not the verdict on it. The listing pop fades, the first wave of sellers finishes, and what's left is the thing that actually decides the token's future. Does it have a healthy market that people can trade every day? Deep book, tight spread, consistent liquidity across venues through good weeks and red weeks. That's a permanent job, not a launch day job. The projects that treat market health as ongoing infrastructure are the ones whose charts still make sense a year later. The ones that treated TGE as the finish line usually find out it was the starting gun. And finally, the market opens once. So that's TGE day from our side of the screen, the night before checklist, the violence of price discovery, the structural sell wave, the desk keeping both sides of the book alive while the market votes, the 4 numbers that matter more than price, and the truth that day 2 matters more than day 1. The market only opens once. You don't get a rehearsal, but you absolutely get to be prepared. If your TGE is coming, this is exactly what we do at EchoTrade. We've been at the desk for more than 2,000 launches, we provide liquidity across more than 90 exchanges, and during major events, we put multiple traders on a single asset around the clock. There's a link below for a free consultation, and if you want to see how markets really work from the inside, subscribe.